Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hey, how's that? Thank you so much. Hello, is the audio working now? Am I still muted or is there no sound? I just turned my audio back on. Can you hear me now? Give me a thumbs up. Okay, thank you, Mahat Kal. Thank you, another mutant. That's why I need you guys. I need you guys to tell me when things are working and when things are not working. So thank you so much. All right, I'm glad to see the sound looks good. The stream looks good. All right, wonderful. Thank you, everyone, for joining me this morning. Okay, so it is an extraordinarily busy trading week, and I'm on vacation, but it's such an important trading week that I wanted to take time before I hop on my cruise in about 2 hours to talk to all of you about what's I expect for the markets and some of the things that you should watch out for. Before I begin, though, I want to make sure that I cover the instruments you trade. So please let me know, what do you trade? What do you want to talk about? I am sure many of you are wondering, why in the world is the euro not crashing after President Trump announced 30% tariffs on the EU? He was suggesting 10%, I think maybe about 2 weeks ago. And, that was a big relief for the EU. But when the letter arrived, actually, I don't even know if it was the letter. It was either the letter or it was, the tweet that he had, which I guess is what he recaps in the letter. And they got hit with 30%, which is more than Japan and South Korea. So if you are confused as to why the euro is not crashing, flat to slightly positive today, raise your hand. Raise your hand if you are confused. If you know exactly what's going on, then, give me a thumbs up. Sounds like Andrew is on the right track. Another mutant who's always, my VIP says taco, possible coordination with others, exhaustion by all. And I think, it doesn't seem like many people are confused. Okay, Peter, good. I'm glad to hear that, you've got some questions about this, which I think is important because, and I do think, Andrew and another mutant are on the right track. The reason why we are not seeing a significant sell-off in the euro, and we did see an initial sell-off in the euro. I'm going to share with you my charts. Give me 1 second to pull up my charts. I'm going to share with you my screen. Wonderful. So you've got my screen here, and this is a very important trading lesson. This is the Asia Open. And look what happened at the Asia Open. 116.88 down to, it's not that much, 116.63. Sunday gap. I want you to tell me if you have attended my previous live streams. What do we know about Sunday gaps? Tell me what you know about Sunday gaps. News is terrible, regardless of how terrible it is. Sometimes it's just this. Sometimes it's something much more significant. Like, for example, when we had the time when Israel and Iran started firing at each other. You had a gap, regardless of how bad the gaps are, regardless of what you think this means for the consequences of the EU, of the US. When we see a gap, what do you think? What has Kathy taught you? Or what have you learned before? Just as Fred and another mutant says, fills. Do not get misled by a gap like this. This is not something that you jump into. You cannot, you know that Sunday market's opening. You know that the news for the EU tariffs is terrible. You know that Europe's gap down. Do not sell into it. Instead, the choice is either to do nothing, because you know that 90%, 95% of the time these gaps are filled, or buy the drop and look for a retrace. Now that's a little bit riskier because it's hard to time the perfect bottom in the gap. Although if you start to see higher highs, higher lows, it's a really strong, or maybe a break of above a significant support level, which I would define as probably this level here, which is this swing low here. When you see a gap, do not sell into it, because 95% of the time the gap is filled. So you can either trade the filling of the gap or do nothing. Now, Serge makes a good point here. What is he saying? He say, in theory, it sounds great to trade the gap, but the spread is insane the first hour. You are so right about that, Serge. So perhaps the biggest lesson from this is do not follow the drop. Do not think this is terrible news. We've got a Sunday gap and boom, I should keep selling because this must be so bad because the market's gapped lower. No, no, no. If you've been here before and you've traded with me before, you should know that you either do nothing or you trade the gap fill, depending upon who your broker is, whether you have a spread. So Wolfric says, I have a question for you. Have you contacted me via Discord? No. I will never. This is very important. I apologize. There's so many people have been scammed by people using my name. And because, I had lawyers trying to shut them down, but my lawyers in the US, they can't shut everyone down around the world. Know that I will never direct message you over anything. If someone is using my name to direct message you, especially if they're telling you to do something in Bitcoin, which I do not do anything in crypto, do not listen to them. So please, I'm really happy that you're smart enough to come online to ask me this question. But so if you guys are listening, this is something that's very important. Do not answer any fake Cathys that are direct messaging you, especially, your red flags should be up if they're asking you to do anything about crypto and asking to send you money. So back to this question. Does tariffs have anything to do with this gap? Yes, the tariff has caused this gap, but the lesson that we're taking today is that gaps are always filled. So what you want to do is you want to either do nothing, do not sell into this gap, or buy the gap for the filling of the gap. And this was caused by the EU tariffs, because we are looking at the 15-minute chart for the Eurodollar. But ultimately, if you think about this, this is not a big move. 1680 down to 1660 is actually a very shallow move for the extent of the tariffs that have been hit. And this is because one of our friends here, another mutant who's always been so in tune with everything, is because of a whole bunch of stuff, which is because, the market's exhausted by the tariffs. They think that this is another negotiation tactic, and because these tariffs don't take an effect until August 1st. So perhaps Trump, depending upon how the stock market behaves, could very much, depending upon how the stock market behaves, could very much walk it back. Now, this is not much, this is a very, very shallow drop in the S&P 500 off the all-time highs. So for Trump to even be worried about this and to walk back those tariffs, I think we need to be down over here, minimum. And that's, minimum 6,000, probably somewhere over here is when he may start to walk back or talk back those tariffs. So we've got about a little bit more than 2 weeks until the August 1st tariffs come into place. But one thing we do know is that what we thought was a more conciliatory approach to the tariffs, maybe about 30 days ago, is just not happening. He's punishing countries hard. He's punishing Japan hard. He's punishing the South Korea hard. He's punishing the EU hard. So chances are this is going to roll over to some degree. And I think stocks will definitely be rolling over. I think that we're going to see, pull back at least to 6,200, probably down to 6,100 in the S&P. Especially if we break, if we combine fundamentals and technicals, that fundamentally we should have a pullback in stocks. Technically, if we break below this low here, which is 62, let's say 45, and the S&P, then we are on course for a bigger drop. And this is one of those weeks that it could happen, which is why I was so thought it was so important to have this live stream, even though I'm going on a cruise vacation in just 2 hours, because this is one of those weeks where we could get a bigger drop because, first off, we're still waiting on more tariffs, and this is also earnings week is beginning. In terms of earnings week, we have the big banks beginning to report on Wednesday. So we'll have to see how those earnings are. Those earnings are, pretty damaging. And so, if those earnings turn out to be weak in a context of an environment where we have softer US data, that could be a problem. However, there's the other side, right? The other side is if those if those, what am I trying to say? If the data isn't terrible, like if US retail sales rebounds, if inflation isn't terrible, if earnings are okay, and we already know the jobs report isn't terrible, then maybe this rally could be sustained, but it's definitely looking fragile at this point. Wally, I apologize that you scammed in Discord with Kathy. I try to warn people as much as possible. I don't trade crypto. Don't ever send people money under my name, pretending to be me. And I will never direct message you. So if someone direct messages you using my name, except, when you are responding to me or directly, or you direct message me first, assume it's a scam. So Trump was especially condescending to Ursula von der Leyen on Truth Social when he announced it. He's been condescending all around, right? I mean, the Brazil tariffs were nothing but a political move. But it is what it is. We're traders. We only react to the political headlines, and we keep our opinions to ourselves. At least I do, at least. Okay, so this week we have a huge week. This week, we have a week where we've got U.S. inflation data, we've got U.S. retail sales data. Boris is live trading U.S. CPI tomorrow at 8:15 New York time. So make sure you join him for live trading that, because we never trade ahead. And this is another lesson I want you to know. You should never trade ahead of the U.S. inflation report, jobs report, or the first GDP report, or FOMC, because it's so uncertain, especially this inflation report, because inflation, we think that should be rising because the tariffs really hasn't. We know the Fed is reluctant to cut interest rates too quickly. So a lot hinges upon this inflation report and the next one, which may or may not come before the September, actually the next one in August, before the September FOMC meeting. So the inflation reports will be very, very important. Now, the dollar index is actually kind of doing something interesting. The dollar index, and I'm going to hide some of these. You know that I love moving averages, and they are very, very important. And the pink line is the 5 SMA. The yellow line is the 20 SMA. And I am watching this very closely. I am watching for whether the pink SMA closes above the 20 SMA. If that happens, it'll be the first time we see a cross since May. And let's look what this happened. When we had a cross in May to the downside, we had a huge move lower. When we had an upside cross last time, it was also in May, and it wasn't a huge move, but it was also a decent move higher. So if we cross here, and we have been looking for a dollar recovery, if we cross here, that would be a strong technical signal that we could have a much more significant rise in the dollar index, which means weakness in the euro, stronger gains for dollar yen, stronger gains for dollar Swiss. And you can see dollar yen, if we move to the dollar yen chart, the dollar yen, and I'm going to re-enable this, is already above most of the major moving averages. There's no resistance pretty much to 150. So if we get the dollar index crossing, the 5 SMA crossing above the 20 SMA, and this will probably be triggered by fundamentals. What are the fundamentals that could trigger it? Either a stronger inflation report from the US tomorrow, or a stronger retail sales report maybe later on the week on Thursday, both of which is very possible. And that's what we're talking about. Because if we look at the calendar, and let me set my calendar to this week. If we look at tomorrow's inflation report, market is looking for hotter numbers. The market is looking for inflation to go from 0.1 to 0.3. And later in the week, on Thursday, retail sales, market is also expecting retail sales to go from minus 0.9% to 0.2%. Now, this would mostly, even the consumers in the U.S. are cutting back. It's nothing to do with consumers being robust or anything like that. It has more to do with the fact that retail sales, let me bump this over. Retail sales dropped for 2 months in a row. So the market is simply looking for a rebound after two consecutive months of drops, because if we had 3 consecutive months of drops, that's really, really bad news. But with non-farm payrolls numbers not being that terrible, there's a very good chance that we could have a rebound in retail sales. And like I said earlier, there's with inflation, the market is still looking for hotter inflation. Inflation is really the thing that's been holding the Federal Reserve back from cutting interest rates. And if CPI really rises from 2.4 to 2.6, then the Fed will definitely not cut interest rates this month. And then the odds for a September interest rate cut will fall as well. So if we get a hot CPI report alone tomorrow, and Boris will be trading with you tomorrow, if we get that tomorrow, then this 5, which is, let me just hide this, the pink line will be crossing and closing above the 20, which is the yellow line. And when it does, as I told you, very simple strategy, strong move lower when it did to the downside, decent move higher in dollar yen to the upside. This one also 5 crosses below 20, very strong move higher. This was a fake out, which happens, nothing can work 100% of the time. But I think I showed you, 3 out of 4 winners, another winner over here and another winner over here, small loser. So when you catch the moves, they are very, very big, very, very generous, high reward to risk moves. So that's why I watch this very closely. And we are at the cusp, not quite yet. Do not front run this because it could loop down like this. Do not front run it. But they're very at the cusp of the possibility of a move upwards here. And that would easily happen if we have good inflation coupled with good retail sales. But we don't even need the good retail sales report. If we have the good inflation report, it could be good enough. But today, it is also important to say that the dollar is lower across the board because the market looks at tariffs as negative dollar. And, many of you are here with me, have been with my live streams for some time. Who's new here, by the way? If you're new, type in new into the chat box. Let me know that you're new to my live stream. If you're new, let me know. But those of you who've been joining our live streams every week, every Monday, I talk about how, contrary to popular opinion, welcome Elgato, welcome Nash, Daniel, Horse Hung, Tinotita, to our Monday live stream. You'll find that this is very valuable. What we do every Monday is you learn about what's going on in the markets, you prepare to trade for the week so that you're ready to execute when everything comes. But you will know, welcome Multi and welcome New Testament. You will know that tariffs announcements is bad for the dollar, not good. Even though it's supposed to raise the US money, it's supposed to hurt the other countries more. We have seen time and again, repeatedly, that when we have bigger tariff announcements, it seems to be more negative for the dollar than positive for the dollar. So it tends to be more negative for the dollar. So that is why we're seeing the dollar lower today. But, in many ways, the big countries have been announced, right? We were waiting for the EU. It's been announced. We were waiting for Japan. It's been announced. China, I hope what they were hit with is it, and I believe it's it. I don't think that they're going to come back again and adjust those levels to a even higher level. So big announcements have been announced already, allowing the markets to fully focus on the data that's coming this week. So the market is fully focused on the data. Thank you so much, Jeff. I will definitely be enjoying my vacation. Gold. I want to talk about gold because someone here was asking about gold. Gold is currently still, I would say, bullish, right? Because we're above the 20, we're above the 5. If we lay on our other moving averages, you'll notice that we're above all of the major I want to hide this comment. All of the, we're above all of the major moving averages, which means that gold is still positive. But Now, if you trade gold, what do we know? Can someone who I know, one of you, someone out here will know, because I know that we've talked about this often. If the dollar is set to rally, do you think, take a wild guess, all right? Do you think that is going to drive gold prices up or down? So if the US dollar, I'm going to type this in, pop quiz, all right? Pop, and this because I want you to learn too. All right, I can't type for some reason, but pop quiz. If, I'm going to type it in here, pop quiz. If US dollar rises, is that up gold or down gold? Okay, let's see. Let me see what your answers are. Down, 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 down. Very good, my friends. Gold is priced in dollars. And just as Horse Hung Capital, one of our newbies who's today, has very correctly said, if the dollar is up, it is negative for gold. So if we believe, and it hasn't happened yet, remember, the 5 has not crossed above the 20, but if we believe that the dollar is going to rise, then gold should fall, because gold is priced in dollars. However, the dollar rally hasn't happened yet. We haven't gotten the good data yet, and we're haven't necessarily seen EU's response on tariffs. But I think they're just going to try to play nice and try to get it down. But I'm so proud of all of you for getting it right, because it means that you're really paying attention and you're really understanding. So so right now gold is still bullish, but if we get a move below 33.25, I would say, which would coincide with a dollar rally, then it would be, then I think pretty much the uptrend is over for the time being. But in terms of the data, I'm neutral dollars this week. I built this on actually I built this on Friday, but I'm actually neutral bullish. I'm neutral because it's so important to be, we do not trade ahead of the inflation report. We do not trade ahead of the US retail sales report. We always trade after those numbers, because it can go either way. And especially the inflation report, it's really, really hard to tell. Prices are supposed to be rising, but so far we haven't necessarily seen strong evidence of that. So that's why, we're neutral for the time being. We'll see how the inflation report is. This inflation report will hands down decide whether or not the Fed cuts interest rates in July, although I think, pretty much it's no chance of that happening. So I'm neutral bullish dollars this week. And a lot of that is going to hinge on CPI. But I do think that we're going to have a greater chance of a dollar rally than a dollar decline. For the euro, we have the negative trade headlines. We got the ZOO report this week. We've got some, I believe we have the IFO report this week from the Eurozone as well. Unfortunately, I think the euro is going to trade heavy. I think, there's probably going to be more bad news than good news for, actually, we don't have the IFO this week. We have ZOO and industrial production. I think we're going to have more bad news than good news. And even if the ZOO report is a little stronger, I think a lot of people are going to say that the higher tariffs is going to make German business confidence and next month's reports lower. So I think euro is on a fundamental basis going to be more negative than positive. UK, we have inflation and jobs reports this week. We had a weaker GDP report last week. And for those of you that are BK members, you can read all of my details here and get the detailed insight. But, and for those of you that are it's just community.bktraders.com. Although I think I have a separate link for this. Hold on. Give me 1 second. I think it's bit.ly. Usually Boris is here with me today, but he is actually not here today. If you want to join my free community and get access to a lot of really great stuff and videos, make sure you hit that link. Otherwise, where were we? Let me pull back this. So we had mostly bearish data, And is the connection still good? Saying I'm having trouble connecting, please check your internet. Okay, if you're still hearing me, give me a thumbs up. Let me know that everything is good. Let me know that everything's working good. Let's see. Can you hear me? If you do, give me a thumbs up. Video bit frozen. Okay, is it okay now? Great. I'm gonna run faster because I think people are waking up and they're using the bandwidth. So earlier they were not using the bandwidth. Anyway, bearish because we had a weaker GDP report from the UK, and inflation and jobs reports will probably be weaker this week as well. RBA left interest rates unchanged last week. And so, and they're not really expected to be hit with that much in the way of tariffs. And for Australia, we do have a jobs report this week. Overall, the labor market has been good. So I think for the most part, we are in a situation where we'll probably get more Aussie outperformance than anything else. And CAD, it's interesting. So I'm bearish CAD here. We had a really, really strong jobs report from Canada. But even though we had a really, really strong jobs report from Canada, I think Canadian dollar is kind of nearing a top. And part of the reason for that is because, they've also been hit with really bad tariffs. And it doesn't seem like negotiations are going well between Canada and the US. Overall, though, I think that dollar CAD is nearing a bottom, especially we think that the dollar is going to rally. Not much going on for New Zealand. We had New Zealand PMI and PSI. Last week, PMI was good. This morning, we had PSI, which is how the service sector is doing. That was good too. So 2 good reports from New Zealand. I think that's going to lead to outperformance of the New Zealand dollar. Swiss franc, yen, I think those are mostly going to be negative because I think the dollar is going to rally, but there will be a bit of a tug of war between risk appetite and how stocks are doing, and that will impact how the Swiss franc and the yen is doing. But overall, fundamentally, Switzerland is definitely more bearish than Japan, even though Japan has its own problems. Wages seem to be increasing, so definitely more bearish Swiss franc than the Japanese yen. Now let's take a look at things on a technical basis. So euro dollar, let's see if the chart will blow up. Euro dollar, sliding down, right? Euro is sliding down, almost going to close below the 20 SMA. If we get a close below the 20 SMA, this will be the first time we're below the 20 SMA since May. And the first time we're coming down, not rebounding, since that month as well. So we're at a very interesting point. I think, it's going to continue to move lower. I think that if we take out today's low, either today or tomorrow, it might just be consolidating ahead of the US inflation report. If we take out today's low at 116.53, then we could definitely get a stronger move down to 115. And I definitely think lower highs, lower lows point to a more significant move lower, and dollar Swiss. There's our euro dollar. Dollar Swiss, we've got signs of a bottom here in dollar Swiss, very tight consolidation. Market clearly waiting for the US inflation report, which is part of the reason why we don't trade ahead of the US inflation report, because the market's just consolidating, waiting for the outcome, waiting for that to trigger the next move, especially this week, maybe in the longer term. So we're consolidating. And but it looks like it's forming a bottom. Dollar yen is definitely, generally speaking, doing better. It's kind of dollar Swiss is the bottom of the chart, dollar yen's in the middle of the chart. I think that we're above some important moving averages. We have no major resistance until 150. Dollar CAD, I talked about how I think dollar CAD's nearing a bottom. We're already forming a bottom, higher highs, higher lows. I think it's at least going to 137.50, and then if it closes above that, there's no major resistance until 139. Pound dollar, we talked about how mostly weaker UK data. It's below the 50 SMA. This is important. It's below the 50 SMA, important support level, and I think that it's headed lower. I think it's headed to 133. But of course, once again, watch out for the inflation report from the US. That's going to decide how everything goes. But I do think there's more downside risk than upside risk. And I do think pound is weaker, looks weaker, and I think it's headed lower than the other major currencies. Aussie, on the other hand, upper right-hand corner of the chart, definitely outperforming the other major currencies. I'm sure you can see that if you look at some of the crosses, for example. But I think it's also going to be vulnerable to the dollar. It's starting to move lower. I think it's going to move lower, but it's probably going to outperform some of the other major currencies. Interestingly enough, Kiwi is the worst performing currency, even though it's the country with the good data. It had strong New Zealand service sector activity. Last week we had stronger New Zealand manufacturing activity. I think that it's because Kiwi is considered a risk currency, meaning that it performs poorly when stocks fall. And stocks are definitely trading heavy and probably going to trade heavier. And in light of no more New Zealand data this week, that's what's primarily affecting the Kiwi. And I think it could continue to drive it lower. So that's basically the outlook for the major currencies. For gold, what else are you guys trading that you're telling me? I'm going back to the charts. Boris, unfortunately, is not here with us today. He will be live trading with you tomorrow, starting at 8:15. So make sure you join him tomorrow. You could just go to the YouTube live stream. He's going to be streaming on YouTube as well as X. In terms of NASDAQ, we looked at the S&P already. We talked about how the S&P is rolling over as well. And then in terms of the NASDAQ, S&P is below the 5 SMA, looks like it wants to move lower. In terms of the NASDAQ, we also have weakness in the NASDAQ. You'll see that in a minute. You can see my connection is kind of going because people are waking up and starting to use all their media. But it does look like it's trading heavy. It's still a little too early to tell because this is the support line here, which is right there. This low here. I'm going to zoom in. That's the support line. And so I think it needs to close below the support line for a more significant move down to the 20 SMA. But I do think US 30 and NASDAQ, Dow, everything is trading heavy this week. All right, any questions? All right, DAX. Let's look at the DAX. I do not trade the DAX, but DE30. No, I mean, you guys should be asking me about the this one. Here we go. So DE30, in general, holding firm, but I mean, those tariffs are going to hurt, right? And so I think that even though we're holding firm, we have to respect the price action. It's a very important thing to be mindful of. We all may feel one way, which is that those tariffs are going to hurt the EU economies, Germany, all those countries very hard. While we may feel one way, if the price action is telling us something different, we have to respect the price action, which is why every day with BK traders, we always look at what is on the calendar, what is the market, what's happening fundamentally, what's happening technically. We always look at market sentiment because we respect price action. And right now, this is more, I wouldn't say it's positive price action, but it's not bearish price action either. So I wouldn't say stay bullish, but I would not be selling until this candle starts to turn red, which I would like to see it drop below today's low at 698. Pound, and then the JP225, which is Japan's index, that is already beginning to roll over. And I think you're already beginning to see weakness. If we close at 39,330 or lower, I think it's going to be much more bearish. And then lastly, pound Aussie. So pound Aussie melting down. As I said earlier, I am bearish pounds. Pound had weak data. Remember earlier, this is combining fundamentals with technicals. I have Aussie outperformance. They left interest rates unchanged. UK, things are sucking. They're not doing well. We're bearish. So that's the fundamental component of the picture, which is bearish pounds, neutral bullish Aussies. And then technically, it is also bearish. So yes, I think it's going to head lower. In terms of the political situation in Japan, usually, to be honest, the political situation in Japan does, a lot of the political situations only have a temporary effect on the currency. So I think that's also going to be the case. I think it's a temporary effect. I think the yen weakness is more of a function of dollar strength and or, the fact that they are not going to be raising interest rates this year. I think we looked at the NASDAQ already, Elias. But the NASDAQ, the stocks in general, NASDAQ looks like it's rolling over, not quite yet. You can't be selling it yet until we get a close below that horizontal line. Okay, any other questions? Boris is live streaming tomorrow. Just go on YouTube/BK FOREX. It's going to be streaming on X. It's going to be streaming here on right here at 8:15. It's going to be live trading with you. We have wonderful live trading sessions. Last time when we live traded NFPs, it was a really great section. We had traders tell us they made $23,000 in 5 minutes. So join our live trading session tomorrow. And if you have any questions, let me know. What is this? Pound yen. I am off for the week. I am on vacation. I have no idea what's going on outside, but I'm on vacation. But I will be maybe posting some vacation photos. I'm going on a cruise. But Boris will be here all week trading with you. So pound yen looking like pound yen does not look like it's hitting 200 to me. Pound yen looks like it's going to fall multi-twins. It does not look like it's going to rally. And then I don't trade Bitcoin, but it's on a tear, right? I mean, crypto trends really well. And so when it flips the other way, you want to respect the flip the other way. But right now the uptrend is intact. It's got a little bit of a wick, which I don't like, which means that we maybe have a little bit of pullback, but I think that it's probably going to continue higher. Alrighty, my friends. I hope that you found the session valuable. EuroCAD, certainly. Make sure you join our free community, because if I have any insights, I'll be posting it there. So make sure you join the free community. EuroCAD is just consolidating. It's doing nothing. It looks like it's a little bit more bearish than bullish to me, but to be honest, it looks just consolidative to me. I'd like to see a move below the 20 SMA for a more concerted move lower. DNA funding, it's going great. Boris will talk about it tomorrow. You can ask him tomorrow when he live trades inflation data with you. Next week, I am doing a second half market outlook. Let me see if I can get you that link. So you want to join this next week's second half market outlook. I'm just going to remove this. Because I am going to be doing a complete outlook on where everything is headed next week. So make sure you join me. Let me see if I can pop in the link to show you where is this link. And feel free to ask any further questions. Let me see if I can find the link. Any questions? Let's see. All right, maybe I can't find it. Let me just if you bear with me one more second, let me see if I can find the link for the live stream, because I think you'll want to join me. I'm participating in, here it is, the Cyber Trading Expo, but this is the link. And I am going to be talking about the second half market outlook. What's going to happen in the markets, what's going to happen with the dollar, with gold, some of the biggest risks for the second half of the year. So make sure you join me. And my session is going to be on Wednesday. My session is going to be on Wednesday, even though it's a week-long Cyber Trading Expo. It's Wednesday the 24th. Here's the link. Wednesday the 24th at 10 a.m. So I'm the first speaker, 10 a.m. Eastern Time, New York time, on Wednesday the 24th. So join me. It's going to be second half market outlook. So I think it'll be interesting to you guys. I worked hard in the presentation, got lots of great information there. So make sure you at least register. I don't know if they're sending the recording, but regardless, attend it if you can. 10 a.m. on July 24th. I'll still be in Florida, so I'll be streaming from here. But second half market outlook, I think we're going to talk about lots of things that are valuable. So Nicole, when you join the free community, it says that there's a splash page that comes up after you join saying, join for $75. That's an offer if you want. But in your mailbox, you should see the email box, a link already to click to get into the free community. That $75, which we're getting rid of very soon, was actually access to our indicators. On the BK Traders community link, the reset password does not work. I think if you don't mind, maybe you can email contact@bktraders.com and let us know, and we'll help you with that. And then Swiss yen, we'll look at Swiss yen quickly. Swiss yen, Swiss yen parabolic uptrend. Don't fade this. As much as Kathy says, Swiss fundamentals are worse than Japanese fundamentals. We respect price action until it drops. Don't sell it. Okay, so make sure you do that. This is the link that's on the page for joining the Cyber Trading Expo and my second half market outlook. If you want to join the free community, this is the link, bit.ly/join BK Traders. So make sure that you, whatever works for you, make sure you click on those links. Otherwise, that's it for today. Thank you for joining me early this morning. I hope you have a profitable trading week. Live trade with Boris tomorrow. Hopefully you guys will make some pips. At the minimum, it's going to be a very fun session. And I will see you all. I'm not going to be live streaming next Monday. I'll still be on my cruise, but I will post a recording to our community. So make sure if you're part of the BK Traders community, I'm going to post a recording of my outlook for the following week. And then I'll do the second half market outlook on Wednesday, the 24th at 10 a.m. So thank you also for joining me. And for the newbies here, I hope you enjoyed this. Every Monday, except for next week, we live stream and we share, what's going on in the week and hopefully help inform you to make the right trading decisions in the coming week. So have a great one. Thank you so much, everyone.